Good afternoon and welcome to HYCM's webinar FX Week Ahead Live Market Analysis with myself, Giles Coughlin. It's good to be here for the week ahead, and we have plenty to cover this week. There's been strong moves over the weekend and to start Monday, so I'm looking forward to explaining those for us. Just to be aware before we get going, if someone could whack me a message and tell me that they can hear me okay, I'd appreciate that. Just use the question panel or the chat panel, which is on your GoToWebinar. If you send me that, I know you can hear me a-okay, but I'm hoping that you can all hear me. Just as I'm waiting for someone to let me know that they can hear me, I'll say hello to some folks as they're coming in. Hi, Chubiran, Lolu, Sheikh Fahana. Oh, that's great, Chubiran. Thank you for letting me know that you can hear me. Yeah, I'm good, Chubiran. Very good. I hope you're good too. Hi, Hashik. Excellent. Well done.
FX Fund, Brazil attracts 9.432 billion US dollars in foreign direct investment.
There we go.
That is for the period of December.
My apologies, just had the squawk on, just turn them off. Okay, yes, looking forward to this week. Don't forget, as always, we're looking at different trading events, entries, exit stops. This FX Week Ahead webinar is not designed to be a signal service. So I'm not coming here telling people how to trade, what trades to take. The whole idea of this webinar is to show the thinking process that I use in deciding which trades to take, in order that you can learn from that and you can start to see strong currencies, weak currencies, strong commodities, weak commodities. And then once you can recognize what it is that makes a currency strong or weak, or a commodity strong or weak, you can start making trading decisions for yourselves. And that, of course, is really what we want to be in a situation where we're making confident trading decisions because we understand the fundamental principles driving the market. So that's what my passion is. That's what I enjoy doing. And that's what this whole FX Week Ahead webinar reflects. So that's just to make it clear what we are doing and what we're not doing. So as we come into the market, the first thing that we're going to see, yes, you've heard it all on the news. We are looking very carefully now at the spread of the coronavirus. Now, the spread of the coronavirus is taking global headlines at the moment. And this is why we've been seeing such huge moves in the market. Now, I'm just going to show you something. Right, this website here, okay. This website here called Teletrader is quite a good website because it's free and gives you at a glance the major indices, commodities and currencies, okay. So I quite like this as a free service. So if you haven't got enough resource to get a professional news terminal, I quite like this because it seems to me to be quite on the money in terms of the price. I'm not sure how much of a delay. If there is a delay, it seems to be a very short one. But what I wanted to show you is, look, you can see the world indices have all fallen. We had, like, the Nikkei was down 2% this morning. The Hang Seng is closed for today for the Chinese New Year, but that's likely to open heavily down when the market opens. We had the Shanghai again, that is closed for the holiday, but both of those will come down. And the Nikkei, down -2%. Now we look at Europe, UK, FTSE 1.63%, DAX 2, French 40 down 2.11%, Italian index down -1. So looking at these broad European indexes, you can see we're down across the board. Now, as I've said on many occasions, you want to pay attention to an equity market when it's down like 1%. So what we can see here is strong selling, -2%, -2% the Nikkei, the DAX -2%, significant and strong, and it's sending out a message. And the message that it's sending out is that the market is very concerned about the spread of the coronavirus. So how does this impact the equity markets? Well, because equity traders are trading the companies within countries, okay? FTSE 100 is an index of the 100 leading companies in the UK and so forth, for the Nikkei and the S&P 500, etc., etc. And what those markets are telling us is that there's a genuine fear that the coronavirus is going to spread. If the coronavirus spreads, people don't travel so much, people don't go into work, companies stop making so much money, or people don't travel, people aren't taking airplanes. And so the coronavirus will have a significant financial impact across the world if it picks up. Now, I was flagging this up from last week. I felt the market was being just a little bit too complacent about the coronavirus. When you look at SARS outbreak in 2003, and you can see that equity markets are always going to be hit potentially quite strongly on this. So we can see that is the narrative that started off this morning. So you've got to understand that narrative, because that is what's driving the market at the moment. Oh, sorry, something just fell off my desk. There, I'm okay now. There we go. So just a quick recap. I'm not going to labour this point. I think most of us know about the coronavirus. It's spreading. There's a city of Wuhan in the Hubei province, population of about 11 million people, all shut down. Some of the big latest significant news is the virus can be spread by people who are asymptomatic. In other words, you might not feel unwell, but you can still pass on the virus. So all those checks that people are doing in China for people's temperature might not work if you don't have any symptoms, but you can still be a carrier. Makes it much easier to spread. At the moment, there's around 2,744 confirmed cases, 81 dead, and these are the confirmed cases outside of China. So we're getting some in US, Australia, Taiwan, Korea, France, Thailand, Malaysia, 4 in Japan, 2 in Vietnam. Now, this was as first thing this morning. So these numbers are rising all the time. This is the area of China. The epicenter is Wuhan. Remember, this is from January 26, so this data is actually incorrect now. It has spread from here, but this gives us a little indication of how it spread from this meant to be this market. I think it was a food market in the Hubei province that has really kicked everything off. So what to look for now? At the moment, the World Health Organization met about 5 days ago, and what they said is that they said this is not yet a global health emergency. Okay, so what the concern is from here is, does the coronavirus become a global pandemic? And is this a global health emergency? If the World Health Organization, who declare this a global health emergency, then we're going to see more risk-off tones in the market. So that is one headline to look out for. It's what I'm looking for. You know, if suddenly get WHO declare coronavirus world global health emergency, okay, it takes on a new significance, so new status, new procedures go into place, so the market's going to take more notice of that. It's something to be aware of coming up. Okay, that was historical. So this is the impact we're seeing in the market. We're seeing gold buyers, Japanese yen buyers, Swiss franc buyers, and oil sellers. Okay, so the reason we're seeing oil sellers is because people are concerned that people will not be traveling so much, people will be using airlines less construction, less people going into work. So oil is being sold on supply concerns. That is the main driver going on in the market. And of course, we're seeing equities are being sold off. Okay, so equities are being sold. So in this kind of environment, let's just have a little look at some of these. Okay, we're going to have a little look at some of these. I'm just going to drag in that's it. Just going to drag in a right, here we go. So this is what I'm expecting. As long as this risk tone remains, I'm expecting the following things, just to let you know how I'm going about making my decisions as I'm trading and looking around. What am I looking for? Okay, you can see oil's fallen into this near-term support around the 52 region, just making its way down a bit further to go, sort of 51.50 really. Looking on the 15-minute chart, you can see that was the sell-off from the from last night, and what I'm looking for here I'd be looking for sellers on retracement. So for today, I would expect sellers on a retracement to here and to here. Okay, so here, 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 those three areas. I'll just put them in so it's nice and easy. So there. There. And there. Okay. So very simple. Look, previous support turns resistance there. Previous support turns resistance there. And that's around the 50% retracement mark of that huge drop down. So any return up to oil markets there, as long as sentiment, I expect to find sellers. Okay. Similarly with gold, we've had some strong gold bids on the open. Okay, so there's a strong bid on the open. So I'm expecting gold buyers here, gold buyers there. And if we get further down, I'd also expect gold buyers in this region here. So expecting buyers on gold as long as this risk sentiment remains. Okay, that's roughly what I'm expecting. Japanese yen, compare it with the Australian dollar Japanese yen pair. Australia is very closely tied to China. So if China is struggling, Australia is going to struggle. Japanese yen, safe haven bid. So we're expecting to see Australian dollar Japanese yen downside. So again, any return to here or to here, 74.40 region, any return to the 74 handle, I would expect to find sellers at both of those levels. As well with like the Nikkei, take the Nikkei, right, expecting to see strong sellers on the Nikkei. So any retracement back up, expect to find sellers. Any retracement to 2400 level, expect to find retracements. And the Nikkei actually is gapped further down. I don't know why this hasn't updated. It should be much lower down here. So any retracement up to this level, 2370 level, I would expect to see retracement. So that's roughly what I'm expecting. Okay, so just to be aware of that going into this event. Now, let's now look at the main events of this week, the schedule events. We obviously have the coronavirus, which is taking center stage, but there are also scheduled events coming up, so this is what we need to be aware of. There's nothing in particular today. It's going to be coronavirus focus for today. We have a Fed member speaking, but I'm not expecting any fireworks from that. Tomorrow, again, a relatively quiet day. We have some consumer confidence out of the US, but I think the US dollar is mainly going to be driven by this coronavirus concerns. If we see further concerns over the coronavirus, then I'd expect to see more dollar strength, because the dollar does work as a safe haven currency. So looking at the dollar index, you can see, I'm not surprised the dollar index bid today. So remember that pressurizes other major pairs. So that pressurizes New Zealand US dollar, Australian US dollar, pound US dollar, Australian US dollar will all be pressured by this uptick in the dollar index. So keep aware on that. Wednesday, we have CPI data. Now, CPI data, this is an important data point for Australia because we have the February rate meeting. Now, the inflation data is likely to increase, but it's probably going to increase for bad reasons. Remember, we've had those terrible bushfires in Australia, and as a result of these bushfires, we've had some crops that have not been harvested properly. Some farmland has obviously been damaged, and all of this makes certain products in Australia more expensive. So things like, apples, farm goods, they will have larger price increases. So this is going to impact inflation. So we'll start to see some of that coming through in the data for this reading and then for next month's reading. So just be aware that we might see some uptick in inflation, but what we might see is that, the reason for that uptick in inflation is not a good reason, it's a bad reason. And it's because of the bushfires, etc., etc. So just to be aware of that. So that could be a something to fade. In other words, we could see a spike in the Australian dollar on a good CPI data, but if the coronavirus is still going on, if there's still concerns about that, then we'd expect to see some Australian dollar weakness if we get a good inflation data. So just you see that those two stories, Fed rate meeting coming out for February. So just be aware of both of those stories and look at the detail carefully, okay, when that comes up. But that's an event I'm looking for, and watch carefully for the reading and then the response. As I said, I wouldn't be surprised if it's a good reading, which I expect it might be. The market says good reading, but bad reason. So that would be a spike to be faded into. Coronavirus concerns still going on. It's bad for the Australian dollar because what's bad for China is bad for Australia, because Australia gets about 30% of its GDP from China. So Australian dollar is weighed on at the moment. So there's twin stories. You've got to weigh up for the Australian dollar. Then we have the FOMC statement. Now, the Federal Reserve is not expected to change rates at all this coming week. It's expected to stay completely flat. Now, there's a slight difference here between the market's expectations and the Federal Reserve's dot plot. The Federal Reserve's dot plot has rates staying on hold for all of 2020. The market itself has been more pessimistic and is pricing in a 25 basis point rate cut this year. So what we want to start to see is we want to start to see any indication from the Fed that they're becoming more optimistic or more bullish. And some of the data has been quite good for the US recently. There's also been a Bloomberg article that's been doing the rounds saying how, you know, the US doesn't seem to be in danger of a recession. And a lot of people seem to be recognizing a less of a danger for the US to go into recession. So that's some of the key narratives going in, and that will be volatile for the dollar. So keep an eye on that, and again, keep an eye on current risk tone, because if all of a sudden, say we got an announcement, you know, China develops a successful vaccine for, you know, the coronavirus. If we saw something like that, then all this risk off sentiment is going to reverse. Okay, we're going to see money going into equities. We're going to see the yen and the Swiss franc sold off. Oil is going to be bought. So you get the opposite opportunity the other way around. You see. So just to be aware of that. Longer term, you know, let's have a quick look. Longer term, once people get you know, SP. Right. We've got the S&P. Look, that's a strong day. That was on the, you know, we haven't got the cash open yet. Okay, so when we get the cash open, the future market for the S&P 500 is down. Okay, so I'm expecting another down day. Okay, but eventually, if it keeps going down, the coronavirus fears, eventually, you know, what you normally expect, eventually the fears are going to recede. You know, the cases will reach the maximum. There won't be new cases, etc., etc., and that we'd expect the S&P 500 to recover. So just to be aware that the equity markets are going up and down with the virus. So in other words, there's opportunities down, there's opportunities up. That's what I'm trying to say. And keep on top of the story. For those of you who haven't traded stories before, that's the story, that's the narrative. The big trigger for me is the World Health Organization. Look out for that. And obviously, news of it spreading to, you know, wildly. So in other words, US, you know, 2 cases in Chicago, 2 cases in Washington, 3 cases in New York. If you started getting that kind of headlines coming in, then the market's going to become very worried, particularly with the S&P 500. Okay, so just to be aware of that. Thursday, big event. It's the pound's rate statement. There's been a lot of, it's been very interesting for the pound recently. Okay, if you go back to last week, there was this data point that was seen as the decider for the pound, and it was this manufacturing services PMI. Lots of analysts were saying, get a good reading here, and the Bank of England almost certainly won't hike. Okay, there's been a run of readings. Some of it have been better than others, and this good reading was expected to reduce the chances of Bank of England rate cut. But, however, you know, expected the unexpected. Even though we got the good data, what we saw a different market reaction. So if you have a look, and this surprised me, I was actually short into this meeting myself, looking for a bad reading, because I thought, you know, looking where the market was, coronavirus fears, etc. If I got a bad reading, I was thinking, well, it was around here. It was on Friday. I thought, well, that's a great place to short from. So I just took a speculative short. The data came up much better than expected, so I closed my position because I thought, well, we're going to see some pound bids. The pound bids didn't come in, and the pound was sold. So I kind of buy the rumor, sell the fact response. So it took me by surprise. I wasn't expecting that, but now I'm not going to fight it at all, especially not now with the coronavirus fears elevating and the yen are really being bought. If we get a surprise interest rate cut, the pound yen pair currently would look like an excellent pair to trade. Okay, so one way, little tip here, okay, it's not trading advice, but it's a tip. Say there's a chance that the UK do surprise with an interest rate cut. If you have a sell on stop order about 25 or 30 points away from price, so say this was just before the announcement, if you have sell on stop order about 141.70, okay, and then put your stop just above recent prices, if there is an interest rate cut, the pound will just fall. You know, if this was an interest rate cut now, and say it happened, or you know, you probably have the pound yen pair falling about 200 points in about an hour. So just to be aware that that's one little tip you can use. And then if there isn't an interest rate cut, you just close your order. Okay, so you're only going to get pulled in if there's a surprise interest rate cut. So that's one way that I'll be looking at playing the Bank of England rate meeting. And then, you know, look at the policy report. Does the bank say, yeah, we haven't cut interest rates, but we will be cutting interest rates in the future? Then we're going to see the pound sold. So again, if we get a bearish response from the Bank of England, then the pound yen would be an excellent pair to trade if we're still in that risk-off sentiment. So if it's still risk-off sentiment, we'd have weak pound and strong yen. So that would be a great pair to trade. Okay, just to be completely and utterly aware of that going into Thursday. Advanced GDP as well for Thursday, which is a risk for the dollar. Manufacturing, always of interest for China. US-China trade deal with phase one being signed. Expect to see that pick up. So that's probably less likely to be market moving now than it was before the phase one China trade deal, because before the phase one China trade deal, everyone was like, you know, is this trade war impacting Chinese manufacturing? Scary stuff. So with the phase one trade deal, you know, signed and sealed, and the expectations is that all this is going to pick up on the manufacturing. And GDP for the Canadian dollar, we had a surprise by the Bank of Canada last week, with Governor Pollock being more bearish than the market was expecting. So that is why we saw this spike in the Canadian dollar. Okay, so prices up, pull back and down. And remember, the method that I like to use, very simple. When you get a surprise price announcement like this, you can draw a Fibonacci retracement and then look to enter on the 50% retracement. That price didn't pull back to the 50% retracement, but that would have been a legitimate way to trade that pair. Weak Canadian dollar, the Bank of Canada was dovish. So look carefully for the data out on Friday for the GDP month on month. So that's one to look for. So here we are again. It feels like each week we've got the scheduled events and the unscheduled events. Remember the US-Iran crisis with oil bids coming heavily into the market. So that was the start of January. Let's have a look. Yeah. So here we go. Let's have a look at that. Yeah, this was the attacks on Iran by US. Okay, 3rd of January. Then there was the Iran's retaliation, 7th of Jan. strong bids gold, and now we're seeing gold bids on the coronavirus. So gold is really working as a safe haven commodity. Remember, safety, drive to safety. That's what you're looking at with gold. Okay, so be aware of that as we go into coronavirus. World Health Organization. So you suddenly get an announcement, then gold is one commodity I'm currently long on. Again, not trading advice. I've got a short-term gold long. I've just got my stop there underneath 1570. Very short-term trade that I'm going for, and I'm just looking for sort of this near-term momentum to carry on. See if there's a quick run up, a quick spike in price to the upside on these concerns. That's what I'm being like aware of. And if we, what targets would we be looking for? Run up to this level here, 1600 and above would be a fair target for me. But I'm looking for an event, I'm looking for the World Health Organization to declare global emergency. In that case, you might see these recent highs being taken out and then gold will march on. Okay, so just be aware. But if the coronavirus starts getting contained and it's not looking so bad, then I'll pull those shorts very quickly. Okay, so this is not a long-term trade, a very short-term intraday trade. And if I see a downtick in volatility indicators that I use, I'll just pull out. Okay, so that's a little bit of what I'm doing, what I'm looking at. I'm also short the Nikkei. So I was short the Nikkei from last Friday. Just as I said, the market was pretty bearish. So I just took so I spiked and it's gapped down nicely. And I'm going to try and hold that position as long as, and I'm monitoring the coronavirus, but I'm not going to hold it to see if we can, because look, if you look, we had this triple top, 1, 2, 3. So now we've got coronavirus fears, so equity should fall. So that was a near-term target. We're around that level in the futures. I don't know why this chart hasn't updated. I don't know, but we're around this kind of region. Once we break through those lows, then potential near-term target for me is the 22400 level. In fact, just have a quick look for. I like to use pivot points as nice targets. Okay, there we go. So yeah, so we're around this kind of pivot point. So break another pivot point, and then we're around here, breaking there. If we break that, then we're looking down 22500 would be a nice potential new target. So I'm just going to keep monitoring that trade as we go forward. Okay, guys, that's been great. Look out for that risk tone, and don't forget the coaching that we do. And don't forget tomorrow, 1 o'clock. I'll keep you guys updated, and I'll just update you on what I'm doing. That's tomorrow, 1 o'clock, the online trading workshop. I hope you have a good day and look forward to speaking to you then. Take care now, guys. Goodbye. Cheers, Trib. Take care now.